FAS26.com offers premium ERP features, master LME and physical trading profitability, track hedge effectiveness and exposure aging.
Every day, millions of tons of industrial metals move across the globe, forming the physical backbone of international trade. Let's track a standard physical deal. A firm purchases 50 metric tons of copper scrap. From the moment it is loaded onto a railcar and placed on a vessel, it enters a 60-day transit timeline. This chart shows the primary vulnerability during those 60 days: price risk. The firm's physical cost is locked in, but the global market price remains volatile. If the market value drops below the purchase price during transit, the firm's entire profit margin evaporates before the ship even reaches the port. Moving tons of material across an ocean is a massive logistical achievement, but the true test for an import-export business is surviving that 60-day gap financially. To protect their margins, traders construct a parallel financial position. They sell short contracts on global derivatives markets like the London Metal Exchange. This is hedging. If the physical value of the metal drops, the financial contract gains value, perfectly offsetting the loss. Managing these two distinct timelines creates massive operational friction. Firms typically track the slow-moving physical logistics in standard accounting software, while monitoring their highly volatile derivative contracts in disconnected spreadsheets. This disconnect breeds errors. A simple miscalculation in a spreadsheet leaves a firm overhedged or exposed to sudden market drops, quietly eroding margins out of sight from executive leadership. Standard backward-looking accounting software is unequipped to process the split reality of physical transit and live financial markets. FAS26 resolves this gap. It is a financial accounting system engineered specifically to integrate logistics workflows with derivatives trading for import-export firms. At its core, the ERP automates standard bookkeeping. It uses logic derived from historical data patterns to generate automated journal entries and processes multi-currency transactions with automatic exchange rate synchronization. The system operates with deep localized statutory compliance. It processes complex global payroll and calculates exact withholdings for diverse regulatory environments like India, the UAE, and Australia natively. These robust accounting features establish the verified, mathematically precise baseline required to support high-stakes market analytics. With the foundation secure, the system activates the Premium Commodities Trading Desk. We can see how this works by examining a live deal labeled Allocation Unit AL0044. This dashboard calculates the difference between purchased metal and sales contracts, revealing a net physical exposure of 1.50 metric tons short. Next to it, FAS26 cross-references broker executions, calculating a net hedge of 0.25 metric tons long, leaving a 16.7 spreadsheet reconciliation. The software then applies risk intelligence to that data. Instead of passively displaying the exposure, the engine calculates the market moves required to reach the firm's target hedge coverage. Detecting the residual unhedged risk in this specific deal, the system prescribes the necessary market action, recommending the trader buy an exact hedge of 0.95 metric tons. The P&L valuation desk tracks the deal's financial health during transit, cross-referencing expected physical profit against the fluctuating mark-to-market value of live LME contracts. This gives traders a net portfolio value for the entire deal, displayed below in US dollars and local currency. The risk intelligence engine moves trade management away from manual estimations toward a structured, data-driven framework. While individual traders manage specific allocations, the C-suite requires a macro perspective of the global portfolio to maintain corporate financial stability. This hedge effectiveness and MTM trend graph lets executive leadership monitor aggregate hedge performance and mark-to-market variations. Alongside it, the exposure aging panel categorizes unhedged metal by timeline, instantly isolating severe risks, like exposed shipments lingering past the 60-day transit window. Armed with total operational visibility, an import-export firm can scale its trade operations globally without multiplying its exposure to market crashes. The architecture of FAS26 is built on a massive dataset of real-world logistics. It is the direct digital translation of over 15 years of work experience in global accounting and financial systems. Users manage deals with clear oversight, replacing administrative friction with audit-ready precision and visibility into their physical margins. But integrating every variable of a trade into a single system, FAS26 provides the clarity required to manage margins across complex global supply chains.